Hey everyone, this is Heather here, and this is going to be a new video on our options summary dashboard. So we do have like one or two videos before this one, but we are constantly making new upgrades and adding new stuff. So those videos have now been those videos are now dated. So I figured I should create a new video because there's so much new stuff that needs explanation, and many members have been asking for a new one. So here we go. So what I'm going to do here is we have a couple of videos on some of these widgets that you see. So I won't talk about them, I'll just mention them in the description. So for instance, the algo flow that you can see on the top, we have an entire video on algo flow that I'll just link in the description, and I won't talk about it in this video. But then we have a lot of other stuff that I think have been added in the last couple of months, and I think that stuff actually needs explaining. Net flow is one thing. We have like new widgets on call versus put volume. We have something called matrix. We have like whale watch, stuff like that. So we're going to try to go through that stuff in this video, and then obviously I think with time I'll try to dive into this dashboard a little bit more, because I think it's a very comprehensive dashboard, and we have tried our best to sort of summarize all information about all information about a symbols flow into this dashboard. But obviously with more information, and there is also this analysis paralysis, because now you have all this information how to actually best use it. So let's pick up a couple of widgets from this dashboard and let's explain them, how to make plays based on them, and talk about that. Alright, so the first thing obviously is this algo flow, but we have an entire video on algo flow. I'll still give a primer on it so that you actually understand when we move towards net flow. So algo flow is just sort of an aggregated representation of options flow throughout the entire day. When the algo flow line is going up, that means the flow is bullish. When the algo flow line is going down, that means the flow is bearish. And that's like all about algo flow. There is a lot of filtering that goes on behind the scenes that filters bad flow, stuff like that. But obviously that's not the topic of this video. Excuse me. Now we have the algo flow, and we're going to transition into net flow, which we have been using over the last 2 months in this bear market, because I'm posting this video in March, and we have had I think 15 to 20% correction in SPY and QQQ. So that was sort of a significant correction, I'd say. But we have been using the net flow, not the algo flow, because with the algo flow you have just this one line, so you don't really know whether it's the call buying, it's the put selling, it's the put buying, or it's the call selling that's actually sending the algo up or down. And because of that, we created something called net flow, which is simply a split of this algo flow line that you see here into two different lines based on calls and puts net premiums. So net premiums is a concept that's very central to Tradytics. So you'll see me talk about net premiums in, I think, like at least 50% of our videos. So what is net premium? So it's a very simple concept where sometimes you want to look at calls or puts, and all you do is you sort of look at, let's say, the total volume, the total premiums, but it's not the total volume or the total premiums that matters. I think it's the net premium. The net premiums here is simply the difference between the volume or the premiums spent on bought positions minus the difference premiums is minus the difference that premiums spent on sold positions. How do we know whether a flow position was bought or sold? We assume, and this assumption just empirically, and I think sort of more logically as well, this assumption is at least 90 to 95% correct. Anytime a trade was filled at ask, towards ask, or above ask, we assume that was a bought position, and anytime a trade is filled towards bid, below bid, stuff like that, we assume that it was a sold position. So based on that, we sort of have this information about whether an options flow position or an options flow trade was bought or sold, and then from that we derive this net premiums chart, which I'll actually go towards. This net premiums chart, where you actually see whether money is flowing in or out of puts, and whether money is flowing in or out of calls, and whether that money sort of that's flowing into calls or puts is actually bullish or bearish. So let's dive right into the net flow chart. So net flow is, again, it's the algo flow, but now instead of sort of having everything into a single line, we have separated the calls and puts. So the green line is obviously the calls, and the green line is calls net premiums. And so the net premiums here is going to be the money spent on buying calls minus the money spent on selling calls. Obviously, if the line is going up, that means, since it's a difference, there is more money being spent on buying calls. Similarly, for puts, if the red line is going up, that also means there is more money being spent on buying puts. Please remember that. If the lines are going up, the green and red lines, that just means there is more money being put into buying positions for either calls or puts. Now, when the line is going down, that just means the people are mostly either sort of closing their positions, which would mean there are sold trades, or they're actually writing contracts or selling contracts in order to collect premiums. Now, that's a very sort of abstract explanation of what this is. How do you actually use it? And that's obviously one question that everyone wants to ask all the time. So let's answer that. So this is, I believe this is SPY. Let's see. So this is SPY, and we actually played this on Friday and Thursday. So just sort of looking at this chart, we can see that we started the day, and when we started the day, the calls were fairly constant, but there was a lot of put buying. And as these flow traders were buying puts, price started to come down. So you see this small sort of 5-6 minute maybe consolidation where we couldn't decide what we wanted to do when we started the day. You can see that although on the price action side we couldn't decide what we wanted to do, on the flow side there was continuous put buying, and then eventually you can see that we started to sort of go down. Now obviously this like 30-minute window, we had a couple of maybe 1 or 2 scalps where if we see a lot of put buying while calls are staying constant and price is trying to consolidate, that could mean that maybe we are going to eventually go down, and that's what happened here as well. Now a very interesting thing happened. Obviously calls stayed still relatively constant, but now you see the line going down. So this could mean two things: either the puts that were just bought in the first 30 minutes, they are starting to get closed, those positions, or more puts are now starting to get sold instead of being bought, which would send this line down. And remember, it's a cumulative value, so any new value just gets added in the previous chart, and we draw it like that. Now when this is going down, when puts are being sold, that's a bullish that's a bullish sentiment. When calls are being bought and puts are being sold, both of those are bullish sentiments, and the remaining two are bearish. So obviously this is a bullish sentiment, and you can see that price actually went up a little bit. So at this point in time, when we see sort of this consolidation and either the puts, now we don't really know if these are sort of puts being closed or being just sold. We can assume some things based on the whale watch chart at the end, which we'll discuss, but we are not always fully sure. But just the fact that now the puts are going down, that gives us a slightly bullish sentiment. And you can see that after this consolidation, we did have a sort of small run from 425 to 427. Again, now we just had like 2 scalps in 1 or 2 hours. But before diving further, I'd like to mention that flow sometimes, especially in very sort of heavily bull markets, flow sometimes does not work as well as it works maybe in bearish markets for SPY and QQQ. It works very well for individual stocks, but for indices, sometimes there is a lot of hedging going on, which can sometimes mess up the flow. But I think for the last 2 to 3 months, this net flow chart has just been working exceptionally well for us at Tradytics. So we'll continue to use sort of this chart for scalps and for day trades, and even for swing trades, until it stops working. Historically, I think in 2021, when we had a bull market in the first 6 to 7 months, a really good one, this chart did not work that well. The charts on sort of individual names worked very nicely, but indices were a little bit sort of hard to predict just with flow, because when the indices are just going up, people only buy puts to hedge their positions, not to sort of do directional plays. But I'm assuming when markets start to go down as well, then they're both hedging their positions as well as maybe making directional plays. So that's one. So please just keep that in mind. Don't sort of watch this video maybe 1 year down the line and tell me that this thing is not working. Obviously, there are so many players involved in trading indices, so it's always sometimes it's always a bit hard to do this really well. But at least for the last 3 months, this chart has been nailing everything about SPY and QQQ. And obviously, you can go back and look at it. How do you do that? Let's talk about that. So this is just 1 day's flow. And if you want to go back a couple of days, even weeks or even months, what you can do is you have this history. You just click on either, if you want to look at 2 days net flow, you just click on 2, and now it loads from 10th March to 11th March. I'll go back to sort of 1 day. So again, I think you should do some analysis on your own to see whether it's working well for swing trades, whether it's working well for day trades. Right now, at the time I'm making this video, this has been working really well for day trades. and not that well for swing trade. So that's what we'll keep doing. Obviously, maybe you start small, you do a couple of small trades, and whatever works, you start sort of going big there. So now you can see that after sort of this put selling, or after this bullish sentiment where we did do a $2 to $3 move, the puts started to sort of go up again, and at all this time you can see that the calls are staying constant, which means the calls are not providing us any alpha here. It's the puts that are providing us valuable insights into what's going on the flow side. And once this started to go up, you can see that while this was going up, especially this, when you see a sudden spike, obviously I think that was a very big trade by either one player or multiple players who were very bearish because they bought these puts, which is what sent the line high. And you can see right at this point in time, you can actually see the stock price coming down. Excuse me, coming down as well, which is pretty cool, right? And all this time now, the puts just kept going up. Now they did start to, obviously, again, I think at this point in time, you can see that some of these players either sold their position, either closed their positions, or puts started to sort of get sold, which is why maybe there was this rally. Obviously, it wasn't perfectly predicted because the flow started to come down from here, but some of the move was already happened. Some of the move had already happened. So obviously, I think there are some limitations of using flow, but just the fact that there was this big order that came in, and as soon as this came in, you can see the price moved from 427 to like 423. So a $4 move maybe in 1 or 2 hours. So that's pretty cool, right? Because this is not price action analysis. This is nothing. We are just analyzing, and we're just analyzing flow to make sort of really good trades. And it's not just sort of flow, because there's a lot of filtering going on in the back end, which where we try to remove the bad flow as much as we can, but we do our best, and then the results are in front of you. And then you can see that we did sort of this small move, but right at this point, you can see the puts line started to go up again. Now at this point in time, there were also some calls that that were bought, but those calls did not really sort of impact what was going on the price action side. So once the puts sort of once the puts were getting bought, you can see the price started to go down again. And now again, you see this spike that was probably sort of some big order that came in on puts being bought with large amounts of money. And again, pretty cool. You can see at this point in time, there was again a $2 move in just like in 30 minutes. So obviously this chart was not perfect, but what I wanted to sort of, and I had not seen this chart before creating this video, and please believe me that I'm telling the truth. I just wanted to sort of go through this chart and sort of think out loud in terms of what's happening in there, so that you can actually sort of go through my thought process, because obviously I developed this, and maybe you can get some insights. And I think we are all learning in the markets. I'm not perfect. I don't think anyone is. So just sort of do your own analysis. I hope you understand what's going on and what are these lines, and then obviously do your own analysis. Go back, look at 2, 3, 5 day charts, see what's happening, and then hopefully you'll learn from it. But just sort of believe me when I say that this is sort of a treasure for us. I think everyone at Tradytics has started to use this in the last couple of months, and this has, at least for me, this has enabled me to stay afloat in the current market conditions, which are pretty harsh, to be honest. I'd like to take a look at 5 day just to see, because this is 5 day would be the entire last week, and I'm making this video on a Sunday. So this is actually good. I think I did take a look at this chart. So you can see when the week started, we had a lot of put selling, but the price was going down as well. And we just saw that when there is a lot of put selling, price should go up, right? And so what happened was, although the price kept going down, the put selling never actually stopped. These flow traders had confidence that what they were doing would eventually work. And look at what happened the next day. So this was all 7th March. On 8th March, we made a move from 414 to about 428, which is like $10 to $14 move in just a single day. And that was anticipated by all this put selling that happened a day prior. So there was obviously a huge red day, but in that red day, flow traders kept selling puts. And now this is like, you can't really predict this with just price action. There are smart people on the flow side that if you just look at their trades using live options flow, you can sort of obviously get an idea, but this net flow chart actually simplifies it and sort of gives you the crux of what's happening in the flow market. So it's pretty cool. Now you can see that we did make a move up, and now while we were making this move up, now either these positions started to get either these positions were now closed, or more puts sort of were now bought. So the sentiment started to sort of turn bearish here. And again, you can see they obviously, when they were buying this, price came all the way down, right? And now at this point they started sort of buying puts again. And although the price kept going up, again, if they are buying all these puts and they're not sort of giving up, then that usually means that they're very confident. Flow traders are very confident in what they're doing. And you can see that eventually price couldn't really break the high of the week, and it came down again on Friday as well, and the put buying just continued. So now that was sort of, I hope this was sort of a useful 10-15 minutes of just going through this chart for a single stock. I'd encourage everyone to go through the chart and sort of analyze patterns in different stocks, individual names as well, and also for different indices, because I think this works slightly differently for QQQ. QQQ, obviously, I think QQQ takes a little bit of time to actually pan out. SPY like pans out within days or within even actually like hours. So that was one really important widget that I wanted to talk about. Let's see if we have something else. So obviously calls versus puts volume, open interest. Most options traders are aware of what volume and open interest is, so that we are just showing what's happening here. Now the matrix one is a very, the idea is pretty cool, and it works very well for short positions, not that well obviously for bullish positions. First, I'd like to mention that there is a guide, and it's a good one, so please do read that in order to understand what this chart is saying. But basically these sort of market makers, or these anyone who writes an options contract for retail traders to buy, and when they're sort of adjusting bid and ask for these contracts, I think for the sake of simplicity, let's sort of assume that these market makers are adjusting prices for these options contracts, which we call premiums. So they usually adjust prices, or they usually adjust premiums in such a way that they don't really go into a loss. So if they're expecting a big move down, they start to sort of adjust the prices of puts in such a way that they're more costly, because they want to sort of, at the end of the day, they want to be the smartest person in the room, and they'll usually sort of change premiums pricing in a way that actually reflects their thinking. And we can actually capture that using different algorithms, and matrix is just one of them, where this green and red line is sort of a trend of what the market maker's expectation of the stock price is, which is what they use to then adjust the options premiums, both call and puts. And anytime, and this yellow line is the matrix line, and so the green and red are sort of the trend region, but then this yellow line is the actual line that's based on the premiums pricing. Anytime this yellow line goes above or beyond the normal region, which is the green and red line, we actually have a long or short trade. And you can actually see that this is again SPY. So before, right at this point, you can see that SPY at around 18th January, it went sort of, the yellow line went below the region, and that I think was followed by a huge move down from 456 to about 431, so like $20-25. And you can see that the yellow line hasn't actually gone above the green line, so we have not gotten any bullish signal in the last 3 months. So this actually helps you gauge the overall trend that these market makers are expecting. So with options flow, we are always looking to other smart people, and we are always trying to follow them instead of creating something of our own. And I think that's the beauty of options flow. With price action analysis, we are often sort of looking to create our own trades. Obviously here we are creating our own trades, but with options flow, we actually know what other people are doing, and we can be very precise with what their intentions are. And if we can do that obviously well, then we have a couple of trades. So this matrix, just sort of a couple of tips. This works obviously really well for short trades. It works exceptionally well for sort of smaller mega cap, for smaller market cap stocks. So Palantir would be one. So like not very small, but anything like 100 million to maybe $50 billion market cap. This works really well for those. and sometimes front run these very long downtrends. So Palantir and Scales, I think these some of these stocks had very long downtrends, and the very entry where the very first entry where the actual downtrend started, this was there to predict that. So even actually in the SPY case, you can see that the entire correction at 456 started with this matrix tool. So it works pretty well as long as you do some sort of due diligence on top of it, because obviously you can see some signals have failed as well. So this is a really good one. Please do read the guide. Then we have the heat maps that sort of just for each strike and expiration, they're actually showing you information on net volume, change in volume, change in open interest, stuff like that. So a lot of people are interested in gamma exposure. I am not an expert in it. I'm still sort of trying to read upon it as much as I can. So once I have a much better understanding of it, I'll create a separate video for that. And I think the last thing that I do want to discuss is this whale positioning timeline. So we discussed earlier on when the net premiums for, let's say, puts are going down, we don't really know whether the sold positions which are causing the red put line to go down, whether those sold positions were sort of closing off previously bought positions, or whether those sold positions were actually opened for the first time. So that's something that this whale positioning timeline tries to solve, where we try to sort of, for each strike and expiration, we try to track the premiums, net premiums for different contracts, for each of these contracts. And you can often see that these whales, we call these flow traders whales, because we only keep the biggest flow in our live options flow tool, and that's what we do our analysis on top of. So we are considering that any flow we have, so there are smart people that are trading that are making those trades. So sometimes these charts can provide you a very sort of nice visual on what's going on and how are flow traders changing their positions, closing trades, opening trades. So this example, so actually let's, and again, I did not look at this chart before creating this video, but let me just show you something. All right, this one. Okay, so you can see we have a 415 and 430, and each of these lines is net premiums for both calls and puts. So each value would be calls bought plus puts sold, because those are bullish signals, minus calls sold and puts bought, because those are bearish signals, and that would give us an aggregated net premium, let's say, at each date. So you can see here where we can see that the 415 contracts for both calls, 415 strike contracts for calls and puts started to go down, while 430 started to go up. Now, what could that mean? One sort of thing that it could mean is flow traders either sort of went into a spread where they bought the 430 Cs because it's going up, and they sold the 415. That's obviously one interpretation. We do need to obviously spend more time looking at the flow to understand what's going on, but just to sort of get a very quick idea on what's happening in the flow market, or how are whales making positions, this is very helpful. And then a second interpretation could be that maybe previously, a long time ago, they had some sort of big positions, which, since we are only looking at about 1 month of flow, we can't sort of see this line going up there, but let's assume that there were some big positions that they sold here, and they actually they actually rolled up their contracts here, which sent this line up and this line down. So that's obviously just one interpretation. Oftentimes you'll see that when there is going to be a new uptrend or downtrend, you'll see these lines go up for out of the money strikes, and you'll see these lines go down for some other strikes, or at least maybe stay the same for other strike, which would tell you that if the line is going continuously up for an out of money strike, that can actually signify that whales are building large positions in out of the money calls, let's say, which obviously is a very bullish sign. So this actually has helped us sort of find uptrends before or while they are starting to emerge. So it's pretty useful, but as usual, I obviously recommend that you go look at this chart for different stocks, see how the stock price reacted, and then go from there. So these were some of the widgets that I wanted to talk about. And obviously there's a lot more stuff in here that I haven't talked about. Please sort of reach out to us via our Discord. So we do have many of these widgets in our Discord as well. So we have the net flow, we have the whale watch. So please reach out to us via our Discord. That's sort of the community that we have built. It's over 14,000 people and we are very active there. So if you have any questions, either reach out to me via Twitter or via Discord. And yeah, please spend some time sort of learning these tools. They're very useful. We are doing our very best to give you the best quality data possible. And we hope you'll like the video. Thank you so much for watching. Goodbye.